persons user group, obviously, says so right there on the TradeStation platform. No disclosures, just as a reminder, on the TradeStation platform, lifetime members receive free updates on TradeStation versions, which we have already done 2 this year. Radar screen updates. 1, we've changed the headers. 2, we added the quarterly pivots on the 9.5. Of course, everyone does get customer support with that. Not only do you get Mary, me, Ben, we also have Virginia, and of course always access to video tutorials. And then what we were doing was once a month, Jeffrey, who started the Pug user group, would come in approximately once a month. We've had people wanting to learn more about the information and other indicators, and I constantly get, what's on my screen? What's on your screen? John, why don't I have that? Well, I have a lot of proprietary private things that I did not include, and that's the difference. I just want to get that house cleaning, but we'll introduce you to the Pug Club in just a minute. What I want to get through is the important stuff and what you guys are here for, some questions. So first and foremost, let me go over a different question. This is a question that an individual had. I like to keep things anonymous. A 60-minute chart on the diamonds from John, monthly and weekly pivots within the last month. I remember you saying that you put a lot of faith in 60-minute charts and scans, and I would appreciate if you could just review the different levels. The dashed lines need some explanation due to that they are not always there but have exceedingly strong support or resistance. May 19th, and that is a really, I just had to underline this, May 19th. May 19th, my different indicators look to have collectively called the bottom in the market. Well, it's kind of interesting because May 19th, we certainly had a lot of stuff, and that's the neat thing about TradeStation. And tonight's topic, scans. So what we can look at for starters is daily buy signals near pivot support. And number 3. So first and foremost, if we're in an upside market and it has a correction and the market corrects, we would want to look for what? Buy signals after a correction near support. That would be pretty cool. If I take a look here at just this simple little, bear with me a second, view data window, here we go. Let's take a look at when that generated buy signal was, and that was on May 9th. So nothing really transpired. If you go over here, you look, wait a minute, a high closed doji at support. Now this is important. This is very important analysis because sometimes these markets have been acting really, really tricky, really sneaky. Institutions are trying to pass off as much trades as they can without being detected. This is the ultimate poker game being played on traders, and it has been in the last year and a half. And I think it's been hard for a lot of individuals to identify this, what I've been telling people, a sector rotational grind that's been on steroids. And I always give this example, even with the little writing tool. It's kind of like a swarm of locusts that attack a field, a farm, and then they move on to another field, suck it dry, move on to another one, suck it dry, move on to another one, and suck it dry. So it's like the institutional traders, they just jump from utilities, get into industrials, go to materials, jump into tech, biotech, go back to utilities, get back into energy, go back, and they've just been doing that kind of grind all year. And then they go into computer technology, and then all of a sudden it's the semiconductor sector. Our scans, and many of you are probably aware of this, have been picking that up. I'm not sure we're going to continue how much longer. I think we just ended that kind of analysis. But what I would do, which was interesting, is put out a lot of those types of indicators that came off the scans, such as back on May 16th, we noted that we had a lot of stuff like the semiconductors, the biotech, the XLK, all triggered PPS daily buy signals. Facebook flashed a daily sell. Now look at the date there, the 16th. So anyway, there was some, as we go through the history, you know, I've put out a lot of these tweets on stuff that we've seen. Like, for example, last week's news, blah, blah, blah. Daily buys, we said to watch for daily buys in software network technology sector. Today we got a bunch, CA, Intuit, F5. Excuse me, it's late. It's been a long week, month, year. And then we had a lot of stuff. We've tweeted these names out. So the question begs, where the heck do these tweets come from? And the funny thing is they come from these scans. Truthfully, they come from the scans. Now, when we run a scan, what am I looking for? Well, obviously, I've just named one main reason. I've actually even tweeted out, hey gang, watch your scan number 3. What's scan number 3? It's simply a buy signal after a pullback, and we're scanning to look for anything that's near pivot support, either the green or the blue. And if we're looking for sell signals, it's either the red or the blue. That's very important, and it has a lot to do with the question at hand. What about these pivots, right? So when we go back and we go, all right, why did we do high closed dojis? Well, this is a pretty important one, because what if, for example, like this day right there, the market was in a buy signal and it didn't go anywhere, and all of a sudden it just launches, right? What happens if it's going into a weekly buy? Well, or it has been in a weekly buy. If we're starting to get identification, I want to know, is there buying pressure? And that's what I want to know. So we might have had an old buy signal, but what's a new buy signal would be a daily high closed doji. It just turns out that Akamai Technologies is in a launch mode and will generate a weekly buy if we close here tomorrow and above a last conditional change at 52.99, and that's Akamai Technology on some strong volume, good volume, great, nice positive momentum on the histogram component, and a good movement that we're seeing here in the right sector on a side note. But I'm going to go and I'm going to examine things here, and we go back and look at 519, for example. 519, whether it was high closed dojis while in a weekly buy signal. I mean, yeah, there were a lot of stuff that, and I'm just clicking on stuff. I mean, Leucadia, I hate that stock, but Leucadia is finally coming into its own. It's financial, Leucadia National Corporation. As you can see, the scans, we're starting to say, okay, what if I only run one scan? Well, I run all scans every single day, right? And the reason I do that, and like this one, daily high closed doji, I want to know what generated a high closed doji. To me, that's pretty important. On 519, you know, we definitely were looking at some names that we're coming across that have rallied since then, right? But over the course of, and this is what's really key and really important, sometimes what institutions do, maybe they buy some on Monday, they buy some on Tuesday, they buy some on Wednesday, and then they buy a little more on Thursday, and then all of a sudden you start to see scans populate, and that's why I always like to share with you guys, it's strength in numbers. And so when you just go down and you go, okay, what kind of sectors are we seeing? Back on the 19th or so, we started to note that in every day subsequent, we started to see a lot of different sectors generate some buy signals, especially healthcare, biotech, as well as the financials. I don't need to tell you what's happened since. We'll just take a look at XBI, right? So, well, I think it behooves us to just know it also covered into a weekly high closed doji the other day. But we actually were looking at a buy setup at 52.71, which was the initial buy, a scale out because we were near pivot, and then exited the trade. I started to see a little bit of flattening on the momentum of the market, and that that was just that particular trade. So the key is when you're looking for stocks to trade or you're looking at sectors to trade, it's important to understand what we do, what's generating the most. And that's how you get the best out of this, because this is, I'm here to tell you, this methodology has been picking up the concentration of buying and selling in that sector. It's not like I'm clairvoyant. Not every trade's, textbook, but I would have to say it's definitely given us some really phenomenal pickups using the methodology and running these scans to know what sectors to go with. I like to see, and on a daily basis, I run nice NASDAQ S&P 500. Now that's an awful lot, but I like to run that because I then will be able to pick up what's generating buy signals across the board, right? And again, it's the key is strength in numbers. So if I get nothing really on the 19th but the day before on the 18th, all of a sudden, folks, on the 18th, we started to see a lot of stocks generate high closed dojis and then start to accelerate to the upside in the financials. And if you look at the financials, the XLF, for example, right, it had follow through. So bottom line is, do not ignore when you're running your scans, whatever you do. This is the key number one point. When you start to run a scan, and it's not just one day, it's 2 days, it's 3 days, all of a sudden you start to see some volume accumulation. That's not a coincidence. It's an accumulation by the institution. So the key is if you go down the list of financials, I mean, I'm pretty sure people can pick out Metropolitan Life Insurers, AIG is an insurer. You can start to see that you got a lot of different, besides looking at E-Trade, you can see that you've got, besides banks, you got the whole kind of area of the financials. By the way, I just wanted to go over and just check out MetLife real quick. And sure enough, while it's not really tearing up the skies, but that concentration of numbers, actually AIG this week picked up a high closed doji as well. So it wasn't just, these are on the 18th, right? And I think that was kind of cool because here we have a new member, not an old member, a new member on top of it with a great question. Hey, I kind of noticed that May 19th, your different indicators looked to collectively call the bottom. So anyway, he took the time, which is always really cool, to send me screenshots of the marketplace. And I think the only thing that's kind of missing for me on this chart would be the, what you guys have is the OBV indicator, right? Now, let me just point out a 60-minute chart. Here's what I mean. If you ever come to the trading room, you're in the trading room, you know what I'm talking about. The 60-minute chart is awesome for not just detecting the trend for swing trading as well as day trading. That's the key. That's why I like the 60-minute chart for day trading as well as the key word swing trading. So let me go and take an example, and maybe this would help, of the diamonds on a 60-minute chart, and we'll go from there. And I'll try to tee up a 60-minute chart, and you can kind of look at what I get to see and what it looks like back on, that's the IWM. Let's go DIA, change this up real quick, and then we'll go back to 518, and here is 518. So this is your 60-minute chart, all right? Now, this is just trading, and it's not, and this is actual techniques. The indicator itself, and let's take a look at and go back into this point in time. Or try to go back in time. So here's the 18th. So what do the dashed lines represent? I think that was the question. What do those dashed lines, the lighter ones, represent? All right, so if the market is bearish, right, and then you can see it's got clearly person's pivots, one indicator is pointing towards what? Lower highs. And then we have what? Lower low, green, higher green than the prior time period, right? And then the market's got a lower green. Volume is down, and that's why you got a moving average. And then all of a sudden, you got a buy signal at support, and that's on the 19th relative to the diamonds being on the 18th. And all of a sudden, a little high close doji. And here's what I like to look for, okay? I like to look at the relationship on the Dow, or I like to look at the volume analysis. This is a volume tool of mine. And I like to look at the momentum, right? The momentum indicator, when it gets overstretched, it tells me that the market might be down too far and it's beyond or at support. So this would be a very low probability selling to chase the market. And you look at this screen, you go, well, it started from here, and then it started from here, and then here, and then here, and now you're going to look to go short because it's in a bearish mode. It's already gone down. It's getting oversold. This is what this histogram teaches us. The histogram is a momentum indicator. It does several things. A, it teaches us overbought. It teaches us oversold levels. It can show us convergences. It can show us divergences. It can show us zero line crosses. And as you can start to see, it's subtle, but look at this. Do you notice that as the price started to stall and then it just started to wane before the buy signal, notice that the red line started to make higher lows. This was telling you that, hey, this market may be stalling. How do you utilize the volume? Well, if the market is starting to move lower and the volume is starting to pick up, in other words, make higher lows like a price indicator, then I would be not looking to be selling. I'm looking that this market's starting to see some accumulation coming into the marketplace. That's how I kind of look at this kind of collectively and use the 60-minute volume. I look at 60-minute volume to say, where is it now in relationship to price? Where was price at another swing low? And where was the swing low collectively with that volume tool? So we do have right here a lower price, and volume did make a new lower low. So I'm going to need to see, in order to get bullish on the Dow Jones Industrial Average, I'm going to need to see at least a turnaround in the marketplace to start getting me a little more comfortable getting long against support. And all of a sudden, note the little subtlety differences. The yellow line is below the blue line, and all of a sudden the yellow line is now above the blue line. So the volume indicator, the OBV, is now turned from being in a selling mode with price to now price going up, and we're starting to see an accumulation. But watch this real carefully. We are starting to see a sequence of what? Higher highs and higher lows as the market's trending up. So this is a different proprietary volume tool. That's my own personal thing that people always ask me about, but that's for another time. So how do we talk about what you guys are dealing with right now, and then how do you make heads or tails out of buying and which buy signal to trust? Obviously, it's not, as I've been saying, it's never one indicator. You got person's pivots, you got the PPS, you got a volume, and you got a momentum histogram. The momentum histogram is based on price. This is based on volume. This is based on volume. So moral of the story is that when you're looking for trades, the beauty of this package, which is an incredible analytical tool, you just got to learn to use it and understand what it's saying, and that's my job to teach you. But here's the key, all right? Now, let's say you're a short-term trader or you're a long-term. I'm not sure where to go with tonight's session, so I'm just going to stick with stocks, WMQ stands for weekly, monthly, quarterly. So we all know we have this right here, the quarterlies now, right? And so we have quarterly pivots, which was the new release. And then we have what? We have this, the long-term radar screen, the monthly. So you know you have monthly. What I always tried, and what really helped us in January, literally pick the bottom, not sell all our stocks, and have done pretty well this year, was noting that while the market was crashing, a ton of stocks and sectors were all trading at monthly support and or quarterly support already in the early part of January. We can backtest that in a heartbeat, as you probably can surmise by just going and touching one market and then expanding a chart and then looking at, like, for example, the XLB. Here's the XLB, and there, sure enough, there's the quarterly support. So when the market crashed, you know, how are you supposed to sell when you're at monthly, not only monthly, but quarterly pivot support? That's a pretty powerful strength in numbers measurement right then and there. All right, so that's hindsight. XLE was pretty bizarre. XLE right at quarterly pivot support, and the list goes on and on. So how am I supposed to, in the first 6 trading sessions of the year, get bearish when literally, depending, that doesn't matter whether it was materials, energies, or now healthcare, XLV. I mean, 3 entirely different sectors, and they were all coincidentally trading at the predicted quarterly support. And it was picked up by looking at this. That's all you got to do, is just look at this, gander at that every once in a while. Now, currently, you will note that the quarterly, and this has a lot to do, this is very important on how I run my scans and what I'm looking for. And that's the key of teaching you, when do you run certain scans, when do you want to jump and really focus in on maybe a specific subsector. We're going to get to that in just a minute. So check this out. Right now, currently, we've got a few sectors in red at quarterly resistance, right? It says Q, so you know it's quarterly resistance. They're already at quarterly resistance, but they're quarterly resistance in a bearish market environment. We're already at quarterly resistance. So if it's really bearish and we're at quarterly resistance, don't you think we should be at monthly resistance? And we're really not. In fact, if you take a look at a lot of the ITB, and all you have to do is say, well, where are we in relationship between the support and the resistance? We're about 4% away from, in IWM, it's monthly support, and 4.5% away from resistance. If you look at this, a lot of sectors are almost exactly equidistant of their monthly targets. 9.8 away from support, almost 7% away from resistance. The list goes on and on. There's, except for this one, which is the semis, which is now 9% away from support, 1% away from resistance. Well, that's got to tell you something. It's not quite at resistance, but it's nowhere near support, which means you probably are looking at the semiconductor sector doing what? Going to close on its highs for the month. So I look at this and I go, how I put the logic together is real simple. If the market in the semis is starting to see accumulation and we're getting near a resistance, did it get up there with a strong accumulation of volume? And I look at the weekly chart and I see my volume indicator and I go, wow, we're all the way back up here and we're nowhere near the rally with volume. So here's where it gets slightly tricky. We hit support for the month, and now we're at resistance for the month. Amazing. All right. Now we're going to close on the high, so maybe, just maybe, next month we're going to get a potential higher high and higher low. And if the market breaks out, and we're going to be very respectful of watching the next time frames the new month, because this is a new month coming next week. So this is why I think it's very important that we had tonight's Pug group, because it gets us into the Memorial Day holiday. We've got the new month starting, you know, as soon as the market closes Tuesday, it's a June starts. I can't believe the year went. Might as well go Christmas shopping because it's coming again. But here's what I'm looking at. This particular sector is not rallying on a lot of volume, number one, and the pivots are going to be important. And the fact that we're near quarterly resistance, to me, says, okay, maybe this thing ran its ground a little much. Maybe there's a little bit more to it. So when I run my scans next month, I'm going to go to, what do you think I'm going to be looking for? Sell signals. Which ones? I'm going to probably focus in on, like, for example, show me, we're probably just going to have daily low close dojis, or we're going to say, show me daily sell signals near pivot resistance areas. So that is going to be a very, and if you go over here to format, most of you are familiar with, I can just uncheck this, go down, and go to TradeStation symbol list, click on industry groups, and here I think we want to go with, if I'm not mistaken, it's been a while since I've actually looked for sell signals specifically in the semiconductor space. So bear with me a second. And I'm doing this live, so there's a good thing. So we got mining, publishing, recreation, retail, telecommunication, and it should be here. Semiconductors, because it's an actual thingamajiggy. It's something physical. So I'm going to click on semiconductors, and then I'll just hit run the scan. So I will start to see more and more stocks. I switch and I go to that radar screen, and I go, show me how many stocks or sectors are already at pivot resistance. And funny thing is, at the current price, we're seeing, here are the home builders, for gosh sakes, more stocks are actually just underneath their monthly support. So if you got a gray line in the sand, that means we're below support. Blue means you're at pivot. That's what that means. If it's gray, it means it's beyond its resistance. If it's green, it means it's at or just under pivot. If it's red, it's at or just above support. That's what the color codings are. Gray means it's exceeded it, it's beyond it, and then the red highlights it's at resistance. Green for support, red for resistance. Okay? So it's kind of really, I know exactly the location in my mind in what to like focus in on the energy sector. I mean, that's kind of mind-boggling. If you think about it for a second, with the big strong move that we've had, think of it this way. In the month, we are actually in the midst, for the most part of the entire sector, at pivot, and we're like 14% away from support, 15% away from resistance, or whatever this is, Hess. But if you look at Hess, it's at quarterly resistance already. So no wonder it's not really going anywhere right now. It's already had a hell of an advance. And then we're coming into a new month, so we're going to see what these valuations technically with moving average components are going to portray. I'm guessing they're going to portray a bullish environment for the next month, and that means possibly some bullish follow-through. So when I'm using my tools, and when I'm using this as a something to give me an idea to trade, I'm working off the radar screen, all right, for quick identification, what's generating fresh buy signals, what's generating fresh sell signals on various time frames, whether it's the new signal on a 60-minute, and many of you, we've covered this already in prior sessions, you know that you can get and change that interval. So if you want to look at the concentration of how many buy signals are populating on a 60-minute, a 30-minute, a 20-minute, and you can obviously change that to your interval time frame. I like 60 minutes, and the more stocks that I see in a 60-minute buy signal, especially as we get near support, the more concentration in numbers, because I did this today at TradeStation. I don't know if everyone was there, but not just to say I am a conspiracy theorist, but folks, the markets are being run by not computers, but human beings with money who have computers. And this is not regular retail people, okay? So let's take a look at something real quick together. DNR, okay? Denbury Resources. This is a daily chart, DNR. I want you to kind of take a look at the both the chart and the volume pattern here, all right? So the volume pattern's negative right now. DNR, you can see it had a high closed doji. It gapped higher on the open and came all the way back down. Volume iffy, but it's below the moving average. What I want you to focus in on is look at the pattern itself, okay? And look at the days that it formed a high closed doji. And then let's take a look at DVN, Devon Energy. Pretty much a very extremely similar pattern. Doji over here, high closed doji. It didn't have as pronounced of a decline today that DNR did, but the same kind of pattern, the same doji, the same day. Let's look at the volume pattern here. And while the volume doesn't look as bad as DNR, it is moving lower with today's price action. So what's my point? This is a $35 stock. DNR is a $4 stock. They're all being traded very similarly, which means they're being allocated. There's money from funds allocating to this. So I think that's the secret to the person's package, is that we are able to identify the pickup in these buy signals that institutions don't want people to know about, and we can gauge whether or not the momentum is positive. We can gauge whether or not there's a strong accumulation, and therefore, oh, we're near support. We got a buy signal. We're above the MAs. There's good momentum. This and its strength in numbers. You got a bunch of energy stocks. So once again, the key is you might get some buy signals on Tuesday, and just don't discard that. Then look to see if maybe Wednesday you got a couple more, right? And then by Thursday, because what we've been seeing over the last year and a half is that they stagger their orders over time. They just don't go all in one sector in one day. They stagger it over time. Another thing that we've been noting is that the markets have had a lot of what I call is the delayed reaction. You've got a lot of scans, and I know, let's see, I don't see Piers in here tonight, but Piers has been very, he's picked up on this as well. Of course, he was a professional money manager, and so what was kind of interesting is he runs the scans, and he says, hey, we had a lot of buys in biotech. We had a lot of buys in, and recently he was talking about last week, a lot of buy signals in material stocks. Folks, that's very powerful information. You know, this is one we actually were talking about in the trading room, NFLX, the other day. It's ironic that I talk about this because let's take a look at this day right there on 5/18. Netflix had a buy signal on 5/18. So between the 18th and the 19th and the 20th, it's not like, you know, they were starting to, and you could see the momentum shift. You could see the buy signal here. And I'll share with you the volume real quick. All right, so the volume is on what? The volume's subtly showing an uptick, right? So you've got this enormous kind of buildup going here, and it's not just one stock. It was a bunch of stocks, so this was money coming back into the market. in a big way. So Netflix was another one, and I'm sure you guys know this was. We covered this last week in the trading room. I was a little surprised today to see it gap higher that much and get that type of follow through. But we are absolutely seeing, between looking at the advanced decline analysis, another technique which I find extremely, extremely powerful is to be able to look at the advanced decline analysis on not the NYSE, but yet all the stock indices, and to compare the type of volume that we're seeing on an accumulative basis. Now, this is a weekly basis. Notice that today, or now that we're up here in the S&P 500, most of the stock indices, I don't want to say anything because it's Thursday, so knock on wood, but most of the stock indices, we're going to be flipped right back either into a buy, or the NYSE is going to be a weekly high close doji. On an accumulation and an uptick on a breakout, by the way, of a new high reading in advanced decline analysis. So price is here, and old price was there, and the advanced decline was there, and now the current price is there with a weekly potential high close doji, right? So what does this kind of insinuate? It insinuates that more stocks are actually making a positive move, and we should see a launch to newer highs. My guess, maybe 10.8, something like that. From 10.4, that's the NYSE. That's just, so what I would be looking at was what rules the roost of this NYSE. That's part of a little bit of education. Just to tell you straight to your ears, it's healthcare, biotechs, and small energy. And that would also play into the Russell. And the Russell's back into a buy, and something maybe a lot of people might not give a lot of credibility to, but we definitely picked up a little bit of volume here, and we are now at a higher high reading as well on the breadth analysis for the week. And with a buy signal ensuing, this is a broad-based rally, and this market's looking to be more indicative of an upside move. How much higher? That's going to depend on the follow-through volume that we get. But I would say, with the amount of buy signals and the wide degree or the high degree of breadth that's coming into the market, another 2 to 3% wouldn't surprise me, and that's what it kind of is looking like. So what I would run and how I'm doing it is looking and utilizing the tools that are right here. And the tools that are right here are simply, are we seeing strength in the breadth? And the answer is, I just shared with you, yes, on a daily basis and on a weekly basis. So while the daily is here and the old high was there, the breadth is lower, it should be. But on a week-to-week accumulative basis, we're starting to see an uptick. What we are also noting here is we are getting a little what we call the X factor volume, that little subtle stuff, like now when the volume crosses back over the blue line, it should be indicative of an upside move. When it crosses below it and you get a sell signal, you're probably going down a little bit, right? We just got a little bit of an uptick. We got an uptick here. So the indicators are positive. The more positive it gets, listen carefully, the more positive these indicators are, right? The more positive the indicators are, both volume and breadth, guess what I'm looking at doing? Running scans in the Russell, the small cap, right? So what's the strongest sector? We actually can utilize this information right here to trade maybe just spiders, IWM, or if you're a heavy, you like trading leveraged ETFs, you can go with TNA. If we feel that the S&Ps is starting to get a consolidation and a pickup of financials, you've got obviously by running scans and seeing more and more money going in back into financials, guess what? And it's not just the insurers, maybe it's the regional banks. We can start looking at maybe doing more ETFs like FAS, the leveraged ETFs there. So we've got several ways to play it. Individual stocks, running scans, looking at the tools to see, can we make better trade decisions on our own? And that's what this thing has been doing, giving us the idea, if I can do it, it's not that I'm clairvoyant, I'm using these tools. It's my job to teach you how to use these charts, okay? So I definitely wanted to go through, how do I run my scans, right? When do I trust running a certain scan? I actually like to look at every single scan almost every single day and find out, okay, this is an interesting one. So here's a daily buy signal near pivot support. And then I've got Stanley Furniture, Campbell Soup got its butt reamed last week. It's volume's coming back, and the longer term volume looks pretty good, but it's still, I might go back and say, well, what else is in that space? That might be just a dead cat bounce. And as you can see, in the consumer non-cyclical, I mean, I got Campbell's, McCormick, Pepsi, yeah, okay, ConAgra, that doesn't float my boat a whole lot, even though it was a daily high close doji yesterday and had some upside move today. That's pretty positive in itself. Kellogg, so all right, so maybe the XLP might, if I find tomorrow that I've got more consumer staples, non-cyclical products generating buy signals, I might have an idea that, you got some upside coming, more positive momentum coming for the staples. So, but when we see every single day coming in here looking at financials, healthcare, biotechs, you cannot ignore that, right? And then all you have to do is have a little bit of, input and say, gee, we've got a lot of financials. Maybe I want to take a shot at the XLF, right? And I mean, coincidentally, the XLF, while granted you'll probably get a little bit more bang for your buck with an individual stock, but you can also do something like the ETF or the what? Leveraged ETF like FAS. So anyway, that is, I hope that was something that helps you guys in the whole part of doing the Pug group. What Jeff envisioned was to, hey guys, this is how I'm trading. These are some of the trades that I'm taking. I run the weekly thoughts and observations, and while I use the printout on Genesis for a lot of the charts, many of you know what the weekly thoughts is. It's my weekly stuff, and it's the same information, but I'm running the scans on TradeStation right here. This package right there, everything that you guys have. So when I get a question that says to me, boy, it seems like it may have nailed the low, it's another coincidental factor that there were more and more stocks that were getting bid up, and that's what makes these indexes, is those individual stocks. Now here's just in final thoughts for that idea is, let's say, for example, you got more financials and you got more energy and you get more technology names. Well, that's not really a Dow trade. That sounds to me like more of an S&P trade. And if I got more biotech and more technology, that sounds more like the Qs, right? So maybe I don't want exposure to going long the Dow. Maybe I want more exposure going long the Qs or the NASDAQ 100. If I'm going to put the same amount of investment dollars down, I mean, if you go long on the diamonds or the Dow, maybe they go up 1%. But that same amount of working capital being put at the right sector based on the information at hand, the Qs might go up 3 or 4%. So guess what? The same amount of investment capital, you're going to get more bang for your buck by being in the right area. And that, my friends, is very important in what we've come to learn, and especially how these indicators are picking this stuff up. All right? So Brad has a question. John, quarterly support viewed on the monthly chart. Monthly support on the weekly chart. weekly support on the daily chart. What about daily support? Best viewed on the 60 minutes. I mean, absolutely. Think of the concept. That's why we kind of have this like lined up like this so that I could look at the daily 5-minute, the 15-minute. You know, sometimes I like the daily in the 60-minute concept. So when you look at like a 60-minute chart on Netflix, right? So with Netflix over the last couple days, daily support, okay, daily support's moving up. That looks great. And then you have your daily with your weekly. Oh, you know, things breaking out and closing out. And again, all of a sudden, it's just last conditional change, up, 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 up. Last conditional change, the white lines. Everyone can see the white lines there, I assume. I'm hoping, right? So here's your white line, there's your white line. So the time frames are all there. You know, looking at that market and that breakout and that little buy signal and that momentum shift is just dynamic. The other week, I mean, we were doing some other stuff and I actually missed this. I'm over it now, believe me. But what we were finding was even Tesla and a lot of the stocks down here. I mean, you start to see that kind of base. I mean, it looks good in, you know, afterwards, but let's look at and just take a look. The market's trying to, and I don't know what happened to my drawing tool. There it is. It was hiding on me. So here's a little flat line. Can you see now? Again, 60 minutes. So this is a direct conversation with why I like 60 minutes for swing trading. We're starting to see the market at this low have a reading of the histogram there. Lower price, histogram's higher. Slightly lower price, histogram's a little higher. Look at the volume levels. What are the indicators sharing with you at this point in time? At this point in time, it's sharing that the market's getting sold off, making lower lows. And just like any other indicator will share with you, the volume's starting to do what? Dry up. So Tesla is one that coming into support, you're starting to see over time had generated a nice little buy signal on the 60 minutes. Meanwhile, Tesla even last week, as we got into a doji, 1, 2, 3, algorithmic didn't generate for whatever reason the orange color on that one, but what was kind of nice is that it did pick this up, the buy signal, right? So the indicators, I mean, they're there. The X factor, the momentum telling you, hey guys, be careful, this thing's getting ready for a launch. You run your scans. Now, it's not the greatest trade in the world, I get that, but you know, it's you know, you're not short the market, and if you were short the market, you'd be out covering your losses pretty quick, right? So granted, there are some really fabulous trades. You just need to know, what is the machine telling us? What are the indicators telling us, right? So the time frames that you guys had, the questions were fabulous. And Brad says, so each time frame support is viewed on the next lower time frame, and you could do it that, or you could do it the other way around, okay? So you have the flexibility. So let's say I don't want, I like to look at this chart. Everything's all kind of lined up. I mean, I got 60-minute charts. I've got the volume creeping in. I mean, here's Tesla, you know, taking a look at the person's pivots generating higher highs, you know, and all of a sudden you got the momentum. Look at the volume there, right? So when I tell people I like the 60-minute, I like the 60-minute, I love the 15-minute. When I look at a trade on the higher degree time frame turning, is the lower degree time frame supporting it? You know, and therefore, if you got a buy signal that took place on the 18th, for example, right? You can run your page and change that from a 60-minute buy to a 15-minute buy as well. So if the market pulls back and the volume doesn't, and the market's made a new lower low and the volume isn't, that's an unbelievable trade setup. And in the trading room, you guys have been in the trading room, you know this is a fact. I look for that all the time. I teach this every single day in the trade room. This is what I look for. If I'm going to say, hey guys, we got, the market's accelerated and it's on light volume, this is not, the trend of the volume. Or guys, this market's pulling back and the volume's going up, this thing's going to get ready to launch. Those are great trades. And so combining the information, that's why it's all been prearranged on this chart for you guys, right? So that's, I think, I'm pretty sure, let's double check here. That answered the questions on the 60-minute time frame. We answered the question on the 60-minute time frame chart and scan, on the 60-minute time frame chart and scan, and chart and scan. That's it. Okay. So if we go back over to, just to share with you guys one last time, let's say, for example, I want to run the scanner and I want to do a specific subsector, right? So I can take, I just want what? A simple buy signal. I don't want to know if it's in weekly, in buy. I just want to know, give me a buy signal. If I go over here to format it and I go to scan criteria, so now I know I'm looking for a daily buy signal. How do I know that? It says right here, J-Person daily triggers. So all I have to do is click the positive sign right there, and you see where it says daily? Go down, and I can now customize whatever I want. I can change that setting from a buy signal for the end of day to 60 minutes. Just do me a favor, when you're done running that scan, and you really don't need to do that, but you would do that if you wanted to get stock sector specific apart from what's on your radar screen. Stock specific apart from what's on your radar screen. Okay? So example, these are the stocks that are on your radar screen. These are the ETFs. These are the subsectors and the stocks within those subsectors, and you have your signals. So here's your 60 minutes. But John, I don't want 60 minutes. Fine, go over here and change it to 15 minutes. It'll take a few minutes to load. All right, but it'll start filling in just like it is right now, and all of a sudden I know if I'm looking for, or perhaps I run a scan and I go, interesting, let me go through this right now. So let's look at this real quick, and I go down and I find myself into technologies, okay, and I only have, let's say, these companies in technology, right? I'm going to copy. I'm going to go over here. I'm going to go down over here, okay? I'm going to go and I'm going to insert a label row, and I'm going to say watch list. Okay. And now I'm just going to click this and I'm going to paste. So those stocks were generated buy signals yesterday, right? Or today, at today's close. These just generated something today, all right? Now, as soon as this fills in, what would be cool is I want, for example, when they, unfortunately, there we go. All right. So I have these stocks that are now, they generated either a daily high close doji, and you can see it did, because here's now the daily chart on that stock, right? Let's say, and this is probably a bad example, it's a $2 stock, but let's go to whoever this guy is, WST Wayside Tech Group. All right, so let's say it did generate a daily buy, and then tomorrow I see that the market comes back to support and generates a buy signal, right? And gives me that little buy signal in my column, new signal, a buy signal, and it's at I can watch that now. I have my own private little watch list based on the scans. So you can go through, or if you just quickly go through your scans and say, oh, by the way, how many stocks generated a daily buy while in a weekly buy? Hey, here's some names I know. I know Tesla. I know Netflix. I know CMG. I know this. I know that. Boom. Copy them off the radar, the scanner, put them into your radar screen, and then you got your little watch list that you can watch tomorrow morning, and you can see, did those stocks indeed pull back in your daily time frame to support? Because a lot of the names, so if you're looking to be a buyer and all of a sudden something pulls back to support and you get a buy signal, you say, hey, I want to buy that against support. Okay, so it's a relatively phenomenal way. It's very powerful to really spot and track the stocks you want or the sectors you want. Okay, so I'm hoping everyone got a lot out of that, because that's pretty. I don't know. How do you guys feel about that? It is. I mean, it really is. I mean, the most amazing thing. I mean, you guys, you wouldn't be here tonight if you knew I was full of it, right? I mean, obviously, you have a lot better things to do ahead of a 3-day holiday weekend, and a great, not only an investment, but I think that many of you have been seeing some positive results out of just learning how to spot these opportunities here. It really has been incredible. A question, the next question, and I'll get into the final announcement here for you guys. Especially, I know 3 of you were interested in what I'm about ready to announce. So here we have, and I'll change this up to futures. Big comment on gold. I mean, I don't know what to say about gold. I mean, that was, everything there on gold. A weekly low close doji, bearish convergence on volume. I mean, a low close doji on the daily. I don't, besides getting into the commitment of traders report information, but the whole thing about gold, and now that, oh, by the way, it's trading right at support, is kind of an interesting concept too. But we might see a little bit, if we close here Friday, it might get just a little bit uglier. We did lose some, we came down pretty hard pretty quickly. But, here's, I mean, I don't think anyone in this room knows that I was telling anybody to buy here, like the folks over at that SON conference. That was pretty amazing. I don't know, you guys are all probably witnesses to that. I mean, in the media, it was everywhere. Every hedge fund manager was touting that they are long and they love gold. And I mean, boy, but yet I don't think either they were the village idiots or they were using the media to get people to get long so they could dump it to them. And I'm not thinking that Stanley Druckenmiller and Paul Tudor Jones, I'm not thinking that those guys are really village idiots. I'm pretty sure Stanley's not an idiot. He really isn't. And so, but could they have used the media to take a profit on their positions? Yes, we were starting to, the technical analysis was actually, the indicators were showing this indicator here. This is a volume indicator. It helps to define a little greater of momentum and of convergence and divergences in volume patterns. This is the actual momentum indicator that you guys have. And I mean, seriously, I mean, zero line crosses helping to confirm price going down, break of the last conditional change, right? I mean, there's a last conditional change. Can't make it up. Right there. Bang. Crossed, closed. There's not a chance in hell anyone should be long from there to here, at the very least. So very powerful information. If we go over to insert, and I think that the whole thing about gold was the net long position, that, and something we wrote about. I've been talking about it for a couple weeks now. In fact, go over here to documents, just so that you guys know. I'm sure you all do. So I think it was even in the 16th issue. So the 16th, just so that you know, this was written on the 14th, so I didn't backdate, I didn't adjust this for anything. So this is actually a trade. This is the one that we put out for XBI, Biotech, looking for a breakout above 5270. Volume convergence, stochastics, seasonality, the whole 9 yards. That populated on our, again, with TradeStation. And then again, just all the techniques here. But here's the goal, and this was really cool. The commitment of traders, which you guys do have with TradeStation, but just for simplistic sakes, and we don't want to press our luck with the technology and cause the computer to go down. So you could see that the hedge funds in blue, COT large specs, we're probably the largest net long position in gold since even before here. And if the entire hedge fund community is long, then who else is going to get longer? You know what I'm saying? I mean, that's, to me, the whole thing about Commitment of Traders report. In fact, it seems more and more big hedge funds managers touting their long gold and staying in it. Perhaps that's one reason to worry. If everyone's in it, who's going to continue to buy? That's the simple logic behind the COT and gold. So now that we just washed out the market a little bit, let's take a gander. The best time of the year to buy gold is not in June. It's towards maybe July. So we'll be watching. We did get a volume decline on gold, but thank you for the question. And, man, it's right there in your indicators. I mean, it started with this and a low closed doji right there. Momentum push, volume down, break below last conditional change. Everything I teach you, all right there. Even in that little advisory service thing, kind of mentioned vertical put spreads, debit spreads, bear put spreads, that is in GLD. So really, really good stuff. Thanks for bringing that question and topic up. Now, we put it in TradeStation just so that you know where it is. If you lose it or you deleted a chart, just go to Insert Analysis Technique. I've added a little twist to, if it hurries up, see, that's what I was going to kind of be worried about that. I didn't want to get hung up in cyberspace. But if you go over here to JPerson COT, you guys should have it in your advanced decline. As you can see, I've got a lot of stuff, you guys. Here's your version COT right there, 9.5 should be there for you guys. Click on it, and there it is. So bottom line is the histogram showed that these guys were the largest net long position. Same thing that Genesis reveals, the largest net long position since way the heck over here, right? And so you saw a little correction, and then it launched one more time. So we'll be monitoring the pullback. And again, if just because they're really long, which this is the longest position they have, if we do get a pullback, and what's different about this time, I want to just give you a quick lesson because I think this is important in the indicators that you have, is the teaching of these indicators, right? And if you kind of say, okay, they were the longest ever, the market went up and then went through a consolidation. So it at a consolidation, and it had a pullback for about a year, right? So when it pulled back, look at the volume, and then as it started to move up again, right? They stuck with their trade, but they never were didn't really add to longs. But what did happen is volume started to really accumulate. So what's really going on here is we've got a heck of a volume collapse in the market in gold, right? Which means, man, if we break below the monthly, weekly, and all that kind of support on some heavy volume, this thing could get a little uglier. So, I'm going to be watching and waiting for a trend reversal, maybe something like, God forbid, a high close doji populates, and while that happens, the volume upticks. Until then, this thing might have a little bit of longer-term trouble, because these boys, we'll get the information tomorrow. They're still long. I probably surmise they are less long, number one. They've changed their minds since it was publicly information, and I'm going to bet the commercials probably covered some of their hedges in there. And that's how you can utilize that information, okay? So anyway, Brad, if the commercials generally are on the opposite side of hedge funds, the thing that you always want to watch for is something I wrote about, is that if the hedge funds and the commercials are on the same side and the small specs are on the opposite side of those two groups, and you're in that small spec category. So for example, let's say the commercials are short and the hedge funds were short. So let me repeat that. Commercials are short, they're hedging. The hedge funds are short and the small specs are long, and you're long too. I would get the hell out of Dodge. I would buy as many puts as possible because the small specs are going to get depantsed. That's the best way to saying it. That's a really strong thing. Other than that, if there's a heavy net long on the commercial side, usually the opposite side is taken because it's a zero-sum game, right? So that's, if it's a heavy net long by the hedge funds, it's got to be a heavy net long on the other side. That's just simple logic, knowing that this is a zero-sum game, all right? So what I wanted to get, and I know that everyone was dying for the few people that had asked me about this, there were some things that we wanted to clear up for you guys. The TradeStation platform came with everything we promised, and we've given you guys, of course, we promised free updates on TradeStation version. So like example 9.5. We also said that eventually we're going to come out with more indicators, because I do have more indicators and people have been asking me about my indicators. And so with that said, we have the Pug Club annual membership, which is something that what you guys currently have as a lifetime member. As a lifetime member, you have current lifetime features. You have your free versions of TradeStation. You have your radar screen updates, which we just did one with quarterly pivots. When there's a TradeStation, if they go to 9.6, for example, we have the customer support for that. We have access to the video tutorials and, of course, the monthly meetings with Jeff. People have been asking about my specific indicators, and something we were trying to do with, at least in beta testing, with my high close and low close dojis on the radar scheme, as well as my scan number 5. Well, this is something that if you're happy and content and you absolutely love the product, then you have nothing to fear. Everything we promised you have, and we've delivered, and we continue to get those services. So if you like what you have, good. You do nothing, end of story. If you are interested in the Pug Club annual membership, you're going to get upgrades, different than updates, upgrades to my personal indicators. The personal indicators we have include my volume momentum indicator, which is a lot different, things that people have never really asked me about, except for a few guys last week and the week before, and says, hey, I think I would like that. These are the volume indicator that I have, helps me to detect volume trends and convergence divergences. That's this little indicator there. As well as, many of you may have noticed, we have worked on the high close, low close on the radar screen. This is something that is more of trading system analysis type information, as you can see, like the high close, low close with the indicator projecting out what the actual high and low, or the profit and loss targets are for the high and the low close doji. Those are personal indicators. In addition, we will continue with private online educational events, and something we've added because people wanted to hear more from me as well, monthly meetings. So that would include one from Jeff and one from me. Also, we are going to be conducting a summer mentoring. Now, this summer mentoring is only using TradeStation. This is a mentoring session for just using TradeStation. And when I talk about just using TradeStation, there's a few other things that you may want to know about. Like, for example, what we've done in our one-on-one mentoring, which was the relative strength analysis. This is something that is a class and a half all by itself that talks about the strength and weaknesses relative to the S&P or the Dow Jones Industrial Average. So this is a relative strength analysis. So that is a different scenario, aspect of the market. Then we have, of course, we're going to do in that summer mentoring ETF review, last conditional change breakout tactics. People have been asking me about that. Option strategies, relative strength, as I pointed out, in case studies. Then we have, for a few of you that were saying, hey, I'd really like to get a little bit more up and personal, we had the VIP Pug Club annual membership. It's $11.29. You get the same thing, everything that you get, except for you get upgrades to my personal scans. The only difference is that it gives you a couple access to some other scans that we teach, like the scans that we talk about. And the difference is the annual membership, upgrade to my personal indicators, the online continue educational events, monthly meetings with me, summer mentoring with the TradeStation, and then, of course, the difference is the Pug annual membership. This would include my scans. If you want more information about this, all right, if you want more information, just simply go to http personsplanet.pugclub.com. pugclub.com. So if you go to pugclub.com, this is the landing page. You can read more about it. Again, if you're a member and you have a lifetime, you get your features, and guess what? You do nothing. You don't have to do anything. It's real simple. Do nothing. Welcome. We still do our meetings. Everything's great, just as we promised. However, if because of ongoing indicators that people wanted, we came up with the Pub Club to help offset the costs, and this stuff is not cheap, as you know, to offset our costs. If you're interested in the annual membership, it's $749. If you want the VIP, it's $11.29 a year. And that is the Pug Club, and that is what we were getting information on and what people wanted. So therefore, we put it together for you guys. All right? So with that said, read about it. If you want more information, what you can do is you can also call the office, and we'll talk to you one-on-one. And the office number, as many of you are already familiar with talking with Mary or Jenny or myself, the office is 561-655-1881 is the number. There it is. Okay? 655-1881. That's it. All right? So that's the special announcement I wanted to go through tonight. A couple things. First and foremost, get this done so everyone knows it's there. Where to find it, it's personsplanet.com/Pug Club. That's it. personsplanet.com/PugClub.com. And that's where you have it. All right? Now, everyone, I hope that this session here has been pretty dynamic for you, at least dynamic in the sense of when I find one individual saying, hey, it looks like you guys kind of, the system may have called the bottom, and it's that picking ability to pick up the buying pressure in the market. And the amount of different stocks and sectors that were all populating all about that time, that is interesting. And more importantly, the fact that, looking for like this one, which I know CA was one that we tweeted out that started off early before earnings came out, but still, it's a gift that keeps on giving. CA. I will say over the next week or so, the technology sector, and this one is kind of interesting to me, is Akamai Technologies. Akamai, again, just cleared, formed a little high close doji, just cleared the pivot. And the RS is starting to move, the volume's starting to pick up, and I'm eyeing this thing way up there. If you can clear the week and get a weekly reading on this stuff that goes positive, and I think that's why weekly reading on this stuff that goes positive, and I think that's why today, just noting the scans, by the way, forming a weekly buy. I'm here if we can find tomorrow, at the end of the day, guess what? You run your scans with the weekly HCDs, and we also want to look at running weekly buy with the daily in a buy mode. So, by the way, that's just another way of saying it's a weekly buy. So, I mean, you can't have a daily buy without the weekly being in a buy. So it's an if and or thing. So sometimes what the scan number one means, if today we get a buy signal, and I think I already showed you, then it says when the weekly's in a buy, it's because the weekly's gonna be in a buy on the close on Friday. And then you run that scan. At the very least, you run, if you don't do anything on end of Fridays, always run your weekly, your buy number one, and your sell number one, and your weekly LCDs. Those are the four that you do religiously every Friday, okay? So, and I look forward to every month coming in and giving you guys more and more insights on how to utilize these tools. This was recorded, and I wish everyone a great 3-day weekend, and I really look forward to seeing what the month of June is going to bring for us now that we've got, I don't know, besides the Summer Olympics, we've got the boxing match between Hillary Clinton and, of course, Donald Trump, so it should be pretty interesting. So thank you, guys. I'm glad you learned some new things, and, of course, we will see you next time. We're in the room tomorrow. Everyone, thank you all.